Now viewers, Dubai's Burj Khalifa, which sees a record footfall of tourists throughout the year, is presently wearing a deserted look as the war in West Asia only intensifies.
What if I told you one of the most famous cities in the world might not be what it looks like anymore? Think about this for a moment. You open social media and see Dubai everywhere. Luxury cars moving through perfect streets, infinity pools overlooking the skyline, malls filled with people. Everything looks alive, flawless, almost unreal. But then, something doesn't add up. Some people living there are quietly saying a different story. Rents climbing faster than expected. Certain apartments stay empty longer than they should. Investors are becoming more careful with their money. And suddenly, that perfect image starts to feel incomplete. Now pause and ask yourself this. If everything is still growing, why are there whispers about pressure building underneath? Why do some areas feel overcrowded, while others feel strangely quiet? And what happens when a city built on constant expansion starts facing limits? Right at the center of this question stands the Burj Khalifa, a symbol of success that the world admires, but also a structure that reflects how fast things can rise and how quickly they can change. And once you start connecting these dots, you begin to see a side of Dubai that most people never talk about. If you're into deep, real-world breakdowns like this, make sure to like the video and subscribe to the channel so you don't miss what comes next. Now, before we go further, a quick note. This video is based on publicly available reports, data, and observable trends. It is created for educational and informational purposes only, and aims to present a balanced perspective rather than make absolute claims. And with that in mind, let's start from the beginning. And to understand what we're seeing today, we have to go back to where it all began. A few decades ago, Dubai was not the global giant you see now. It was a small trading port along the Gulf. Oil existed, but in limited quantities compared to its neighbors. That meant one thing: Dubai had to think differently. Instead of relying only on oil, its leadership made a bold decision: build an economy that could survive without it. So they focused on trade, tourism, and global business. In the 1980s and 1990s, projects like the expansion of Jebel Ali Port and the growth of Emirates Airlines started connecting Dubai to the world in a powerful way. This was not random growth. It was strategic. Then came the early 2000s. Free zones were introduced. Foreign investors were allowed to own businesses in specific areas. Taxes were kept extremely low. And suddenly, Dubai became one of the easiest places in the world to start and scale a business. Money began flowing in from every direction. At the same time, construction moved at a speed rarely seen before. Entire communities were built in just a few years. Islands were created in the sea. Skyscrapers started rising across the skyline. Tourism also exploded. According to the Dubai Department of Economy and Tourism, Dubai has grown into one of the most visited cities globally, welcoming tens of millions of international visitors over the years. That kind of foot traffic created constant demand for hotels, retail, and real estate. And for a long time, the formula worked. Dubai became a place where opportunity felt unlimited, a city where people came to build wealth, grow businesses, and change their lives. But rapid growth comes with a hidden cost, because when a city expands this fast, it depends on one thing more than anything else: continuous momentum. And the moment that momentum slows down, even slightly, that's when the real story begins to reveal itself. And that momentum led to something the world had never seen before. A structure designed not just to stand tall, but to redefine what was possible. The Burj Khalifa. When construction began in 2004, this wasn't just another real estate project. It was a global statement. Dubai was no longer trying to grow quietly. It wanted attention. It wanted to lead. The goal was clear: build the tallest building on Earth. And in 2010, it was completed, rising over 828 meters, breaking multiple world records, and instantly becoming one of the most recognized landmarks on the planet. But behind that success, there's a deeper layer most people overlook. The tower was developed by Emaar Properties, one of the biggest real estate companies in the region. The vision was ambitious: luxury apartments, corporate suites, observation decks, and a global tourist attraction all in one place. At first, demand was strong. Investors from around the world wanted a piece of it. Owning property inside the tallest building in the world wasn't just about living space. It was about status. But timing played a critical role, because the tower was nearing completion. The world was going through the global financial crisis. Liquidity tightened, markets slowed, confidence dropped. Dubai itself faced financial pressure during that period, and in a widely reported move, financial support came from Abu Dhabi. Shortly after, the tower was officially named Burj Khalifa in honor of Sheikh Khalifa. That moment quietly revealed something important. Even the most ambitious projects are not immune to global forces. And while the building stood tall, the environment around it had already begun to shift. Over time, the Burj Khalifa remained a major attraction. Tourists continued to visit. High-end units continued to sell. But like the city around it, its story became tied to larger cycles. Booms, followed by corrections. Growth, followed by pauses. And that raises a critical question. If even the most iconic symbol of Dubai was shaped by external pressure, what does that say about the rest of the market? And that question is where the cracks begin to appear. On the surface, Dubai still looks strong. New towers continue to rise. Investors are still entering the market, and tourism remains active. But when you step back and study the data more closely, a pattern starts to form. Dubai's real estate market does not move in a straight line. It moves in cycles. Prices rise quickly during boom periods, and then they correct. After the global financial crisis, property values in Dubai dropped sharply before recovering again. Then around 2014, another slowdown phase began, where prices softened for several years. According to insights from the Dubai Land Department and analysis often highlighted by the IMF, this pattern is largely driven by two forces: high supply and dependence on global investment flows. Dubai continues to launch new developments at a rapid pace, especially in the luxury segment. But demand does not always keep up at the same speed. When that gap begins to widen, pressure starts to build. Some reports suggest that in certain areas, particularly in high-end properties, units can take longer to sell or rent during slower periods. This does not mean the system is breaking, but it does point to imbalance. And in a fast-moving market like Dubai, imbalance is often the first signal that something is shifting beneath the surface. So now the real question becomes clear. Are these simply normal market corrections? Or are they early signs of a deeper change that has not fully revealed itself yet? Let me know what you think in the comments. Now this is the part of the story where opinions start to split and where the phrase "empty Dubai" began circulating online. But before jumping to conclusions, the reality is far more layered. Dubai is not empty, it is not collapsing, and it is not abandoned. In fact, the city remains one of the most active global hubs for tourism, trade, and migration. According to the Dubai Department of Economy and Tourism, Dubai welcomed over 17 million international visitors in 2023, showing a strong recovery in global travel demand after the pandemic years. On the ground, the reality is easy to see. Airports are busy, hotels operate at high occupancy in peak seasons. Major attractions and shopping districts continue to attract millions of visitors every year. But here is where the nuance begins. Because while the city remains busy, not all parts of it feel equally active all the time. Some reports and market observations suggest that certain residential zones, especially in the ultra-luxury segment, can experience periods of lower occupancy. This is not unique to Dubai, but in a city that grows as fast as this one, it becomes more visible. The Dubai Land Department has consistently shown that Dubai's property market includes a large share of off-plan and investment-driven developments. That means many properties are bought not for immediate living, but as long-term investments or second homes. This creates a unique pattern. Buildings can look visually complete from the outside, but actual long-term residential occupancy can vary depending on location, pricing, and market cycles. At the same time, Dubai continues to attract a constant inflow of new residents. Professionals, entrepreneurs, and skilled workers keep arriving every year, which maintains demand in many areas of the city. So what creates the empty perception online? Often it comes from contrast. A quiet residential tower at midday can look very different from a packed tourist district like downtown or Marina in the evening. Social media tends to amplify these contrasts, especially when clips are taken out of context or shown without timing. It is also important to understand that Dubai's economy is highly seasonal in certain sectors. Tourism peaks during cooler months, while some residential and commercial activity fluctuates throughout the year. So instead of a city becoming empty, what we are actually seeing is uneven distribution of activity across space and time. Busy zones remain extremely active. Other areas move at a slower pace depending on demand cycles. And this is where perception starts to diverge from data. Because online, a quiet street can go viral as Dubai is empty, while in reality, a few kilometers away, thousands of people are moving through business districts, malls, and airports at full capacity. Now let's move into the part that is rarely discussed openly, not because it is hidden, but because it is often simplified online. When people talk about Dubai, they usually focus on two extremes. Either it is portrayed as unstoppable success or as a city facing decline. But the reality in between is far more complex. One of the biggest underlying factors is cost pressure. Over the last few years, housing rents in key areas of Dubai have increased significantly, especially in central and high-demand districts. This is supported by multiple market trackers and reports aligned with data trends from the Dubai Land Department. When rent rises faster than income growth for certain groups, it naturally creates movement. Some residents upgrade, some relocate, and some choose shorter stays instead of long-term settlement. Another important point is the nature of Dubai's population. A large portion of residents are expatriates, meaning the population is highly mobile. People come for work opportunities, business setups, or short to medium-term contracts, and then move on to other countries. This creates a constant cycle of arrival and departure, which can make population stability feel different compared to more traditional long-term settlement cities. At the same time, Dubai continues to attract high-net-worth individuals and global investors. This inflow supports luxury sectors, premium real estate, and high-end services. But it also creates a layered city experience, where different income groups experience the city in very different ways. And this is the part most people miss. Dubai is not operating like a single uniform city. It is operating like a fast-moving global platform. One layer is tourism, one layer is investment, one layer is long-term residency, and each layer moves at its own speed. So when people say something is changing, it is not always about decline. Sometimes it is about structure, how a city is built, who it attracts, and how long those people stay. And that brings us to the bigger forces shaping everything happening underneath. Now, to understand the bigger picture, we cannot look at Dubai in isolation. Dubai is deeply connected to the global economy. And when global conditions shift, cities like this feel it quickly. One of the biggest factors in recent years has been interest rates. As major economies like the US and Europe increased rates to control inflation, global liquidity became tighter. That means less easy money flowing into real estate markets and high-risk investments. For a city like Dubai, which attracts a large share of foreign capital, this change directly influences demand. At the same time, global economic growth has slowed compared to the post-pandemic recovery phase. According to institutions like the World Bank and the IMF, investment behavior has become more cautious, with capital moving more selectively into markets that offer stability and long-term returns. Geopolitical uncertainty also plays a role. When global tensions rise, investors often shift strategies, delay purchases, or diversify away from certain asset classes. This affects real estate flows, tourism patterns, and business expansion decisions. So what looks like a local trend in Dubai is often connected to global financial conditions. The city is not separate from the world economy. It is one of the most sensitive indicators of it. And that is why even small global shifts can create noticeable effects on Dubai's growth rhythm. Now, after looking at all the angles, we need to step back and separate emotion from reality. Dubai is not collapsing. There is no verified data that supports the idea of a city in decline or becoming empty. In fact, core indicators still show strong activity in tourism, trade, aviation, and real estate development. Landmarks like the Burj Khalifa continue to attract millions of visitors every year, and the city remains one of the most important global hubs between Asia, Europe, and Africa. At the same time, it is also true that Dubai operates in cycles. Like many global cities, it experiences periods of rapid expansion followed by corrections and stabilization phases. This is especially visible in its real estate sector, which is heavily influenced by international investment flows and global interest rates. So the reality sits in the middle. Not extreme growth without limits, not decline or failure either, but a constantly adjusting system that reacts to global money, demand shifts, and population movement. And that is the key point many people miss online. Short clips and headlines often show one side of the story, either extreme success or extreme concern. But the real economy is always more balanced, more complex, and slower than viral narratives suggest. So instead of asking whether Dubai is rising or falling, a better question might be this: how does a city stay stable when its growth is driven by constant global movement and rapid cycles? Because that is where the real story of Dubai actually begins to unfold. And now, as we reach the end of this story, we return to the same feeling we started with, that sense of fascination, mixed with uncertainty. Because Dubai has always represented something bigger than just a city. It represents speed, ambition, and the belief that anything can be built if the vision is strong enough. From a quiet trading port to one of the most recognized skylines in the world, to global landmarks like the Burj Khalifa standing at the center of it all, the journey has been nothing short of extraordinary. But what makes Dubai interesting today is not just what it has built, it is how it continues to respond to constant change. Global money flows shift, real estate cycles move up and down, population dynamics evolve, and cities like Dubai feel these changes faster than most places in the world. So what we are really seeing is not a final chapter, but a transition phase, a moment where growth, correction, opportunity, and pressure all exist at the same time. Some parts of the city will always look booming, other parts may slow down. And depending on timing, both stories can be true at once. But underneath all of this, one thing remains clear. Dubai is still positioning itself for the next global cycle. And maybe the bigger question is not about Dubai alone, but about how modern cities survive in a world that is changing faster than ever before. And that brings us back to the beginning of this video, where perception and reality often look very different depending on how closely you are paying attention. If you watched till here, thank you for staying with me. If you found this video insightful, don't forget to like, subscribe, and turn on the notification bell so you don't miss future deep dives like this. Share your thoughts in the comments. Do you see Dubai entering a new phase of growth, or simply moving through another cycle like before? And share this video with someone who thinks they already understand Dubai. Still moving, still changing, still evolving.